Welcome back. Now, 2022 remained a record-breaking year for venture capital in Africa by deal volume as it maintained a three-year accelerated growth curve in capital deployment. While capital invested into African startups faltered slightly, the total amount raised remains relatively stable in 2022 and maintained a record set in 2021. What's keeping this trend up? Nadia Kouassi Coulibaly is head of research at the Africa Private Equity and Venture Capital Association, AVCA, and she provides more insights. Good afternoon, Nadia. It's good to have you on the program. Nadia, could you unmute your mic, please? Could you unmute your mic?
Yes, can you hear me?
I can hear you loud and clear now, Nadia. It's good to have you.
Okay, cool. Thank you.
Now, Africa remains one of the fastest growing venture capitalist markets globally. Can you tell us why this is, despite the largely unfavorable macroeconomic climate we're seeing?
Yes, sure. So we have this strong performance at various reasons. So the first reason I would say is the fact that Africa was and continue to be one of the fastest and growing capital market because of its relative infancy youth, right? Because to date, Africa's share of the global pie was still small, so 1.2% of the total value of the global venture funding in 2022. So the continent has more ground to cover than other emerging markets or developed markets like Europe and Asia. Another reason is the high investor confidence and interest on the continent, therefore has a greater impact than it would have been in other regions, as the baseline starting point is different and relatively low. Another reason for the fact that Africa is, still the fastest growing market lie in the configuration of its ecosystem, which is driven by deal at the seed stage. So seed stage deal were also the largest market segment in 2022, demonstrated a growth of approximately 50%, and notably this seed investment led by African investors, which invest at smaller ticket size. So we expect, because of this, that deal at this stage had a higher degree of insulation from the global market headwind and thus contributed to the acceleration of the deal activity on the continent last year. Moreover, I would say that greater investor confidence also in the early stage. So we have a seed stage and early stage. So at the early stage across Africa, this segment attire more attractiveness from investors. Series E and B grew approximately by 25%, so with an increased median deal size in the bracket of 10 million, which is the highest median deal size across the globe.
That's quite interesting. Now, looking at AVCA's Venture Capital in Africa report for 2022, West Africa attracted 30% of venture capital deal volume in Africa. You mentioned that earlier, and Nigeria driving 22% of that. What do you think are the key parameters used by venture capitalists when deciding where to put their money? Because I saw a lot of different factors that were considered in that report.
Yes, so just to give you a few factors, so I will give three ones. So the first one, I would say the market size and the potential. This is a key factor for investors. So this is also what makes Nigeria attractive, for example, home to approximately a fifth of Africa's population. So highest performing sectors like financials is driven by digital banking service, where the market potential across the continent is 300 million people. So the opportunity is there, the opportunity to establish a presence also in multiple markets across Africa contribute to this. For example, we have seen multi-region deals accounting for the highest value of investment at 35%. The second reason, I would say, a more favorable regulatory environment. So well-articulated policies and regulatory environment create greater investor confidence and certainty. And for example, let's say the Nigeria Startup Bill serves as an important framework in Nigeria to create an enabling environment with input from the private sectors and also bridge engagement gap between private and public sectors. Let's see also the Egypt case. So back in 2017, Egypt enacted an investment law which opened the startup ecosystem in Egypt to investors by safeguarding investor interest. So in the 5 years since then, there have been an impressive increase in venture capital deal volume in Egypt. And let's say the third reason I would give you is, as I was mentioning before, the national market in Africa. So many startups are providing novel solutions as African communities' interaction with global market continue to change, and exhibited in sectors such as the consumer discretionary, where e-commerce is a driving force behind the growth of the industry. So tapping in more digitally connected population.
And that's quite interesting. Now, in your report, venture debt, that's something I saw that's quite interesting, accounted for about $1.3 billion out of $6.5 billion of funding inflows into Africa. Now, with the Silicon Valley Bank in crisis mode now, how much impact do you think this will have on venture debt raised by startups in Africa?
Yes, so I would say while venture debt is being used with increasing frequency in Africa early stage ecosystem, it remains an emerging trend on the periphery rather than a key component of the African investment ecosystem to date. So this is likely to change, of course, as awareness of the advantage of venture capital become better known to entrepreneurs. But the uptake of venture debt in Africa also leans on more towards startup raising mixed instruments, so equity and debt rounds rather than exclusive debt rounds. So the Silicon Valley Bank crisis does, as I think, minimal bearing in Africa, given the nascency of the venture debt integration and the fact that debt is raised in mixed instrument round, as I was saying previously, where, yes, the debt component is most likely provided by private credit fund managers or local financial institution and not large international commercial bank like Silicon Valley Bank. So.
We do hope the crisis doesn't filter into startups in Africa, because trying to raise money through debt instruments is quite difficult these days, especially with rising interest rates. And with specialized banks like the SVB in crisis, that might be making it more difficult for startups who don't have venture capitals, capitalists investing directly into their firms. Thank you so much, Nadia Kouassi Coulibaly, Head of Research, Africa Private Capital Association, for joining us this afternoon.